Hey everyone, thank you for attending the Place Your Trades Network Spaces to discuss nuclear. This Spaces is brought to you by TraderVate, which has a custom web app dedicated to trading CME Group's new daily option contracts, including indices, energy, metals, and now Bitcoin. You can now trade these also on the DOM on TraderVate's main platform as well. It's a great way to get exposure to the futures market with limited risk. You can use the link in my Twitter stream to go and get the TraderVate app for free. I also write a weekly blog and a daily pre-market overview on the markets that you can subscribe to at placeyourtrades.com. It's absolutely free. And then I will be doing a summary of this episode with my key takeaways that will be available to download as a PDF on the Place Your Trades website tomorrow. So keep an eye out for that. I'll also tweet a link when this is ready. Now to introduce our guests, we have Chris Timmons, CEO and president of Pegasus Resources. Chris Timmons is a serial entrepreneur and investor with over 20 years of analyzing and speculating in the metals, mining, and technology sectors. He's been involved in many public companies during his career and has served on public company boards and held various positions, including as CEO. Pegasus currently holds 4 uranium properties located immediately northeast of the prolific Athabasca Basin in northern Saskatchewan. Next, we have Justin Hoon. He's the founder and publisher of the UraniumInsider newsletter, the leading investor publication in the space that covers a gamut of uranium market fundamentals, ETF flows, and individual uranium mining companies across the sector. He's been featured in Bloomberg, CBS, MarketWatch, CNBC, and other financial media outlets. Since its inception in 2019, UraniumInsider's focus list portfolio is up 320% and has outperformed the URA uranium ETF benchmark by a factor of 3. Justin is an impassioned supporter of nuclear energy, whose work in the sector remains in high demand. Next, we have Pete Devietien. I hope I said that right. He's born and raised in Indiana. He's an undergrad and graduate degrees in nuclear engineering from Purdue. He was offered a job on a computational plasma physics design team at a fusion startup in Canada, General Fusion. He dropped out of the nuclear engineering PhD to take that job. While working, I lived in Canadian poverty line for 7 years, which is half of the American poverty line. So he shoved all the money into the stock market, 50 times his money, and now moved back to Florida and started 3 companies, by far the most important one being a fusion design company. And right, and now we're going to start, I'm going to start with Pete first, because I kind of want to go over this kind of from a macro standpoint, basically just talking about, what is nuclear. So there are a lot of misconceptions around nuclear energy and nuclear waste, particularly in the West, particularly after Fukushima. So can you, for people that don't know, can you briefly explain how a nuclear reactor works, kind of in layman's terms, what is done with waste, et cetera, and how a nuclear reactor facility actually works?
Yeah, absolutely. I just want to make sure that my microphone is connected to my phone. Can you hear me clearly?
Perfect.
Okay, cool. Okay. So, hi everyone. I'm Peter Devietien. I'm the crazy fusion guy. So I'll break it down into 2 parts. One, how a nuclear reactor works, one, how a nuclear power plant works, and then 2, how the nuclear reactor works. So a nuclear power plant pretty much works the same as a coal power plant. It just boils water, which turns essentially a windmill, like a super high efficiency windmill, which is a turbine. And then that turns a giant magnet, which then pushes and pulls electrons on the grid. The reactor boils water, and then that essentially creates a stream of steam, kind of like a tea kettle. And then that's what turns the giant fan. This is actually, it's kind of unintuitive, but if you were to have a desk fan and then you were to just grab the blades and crank it backwards against it, you would actually add electricity back into the grid. So the nuclear reactor pretty much supplies the wind to crank the fan backwards. And then that's the same thing as a coal power plant. So then after it generates the steam, it has to cool down the steam to make water again to put back into the reactor. And that's what the giant cooling towers are that everyone thinks of when they think of nuclear. So that's how the power plant works. And then the reactor, it's a machine that's designed to harness nuclear fission, and then nuclear fission as opposed to combustion with hydrocarbons. You can kind of visualize combustion with hydrocarbons like coal. That's like coal, gas, oil, wood, candles. They're all rockets. That's all combustion, like propane. You can kind of visualize that as like the hydrocarbon being like a long spaghetti stick, and then oxygen coming in and ripping off some of the hydrogen, and then that breaking the spaghetti stick, and then that creating energy from breaking the spaghetti stick. Whereas nuclear fission, you actually go to the core of the atom, and you take the largest atom, uranium, and then you break that in half, which is like really a very violent, like there's just a massive amount of energy. And so, yeah. So without going into too much detail, it creates about 1 million times as much energy per mass of fuel for fission versus hydrocarbons. And then I'll pass it back to Tracy for now, but I can go into more detail on how reactors work, but there's obviously a lot of detail there.
Yeah, no, I know that's kind of hard to put it down into, a brief discussion, but, just to kind of get an idea how the facility works. And then kind of, can you talk about maybe some differences between types of reactors, the benefits or disadvantages, and what are some different types of nuclear reactor designs and their specific characteristics?
Yeah. So I zoomed out high enough level to where what I said applies to all nuclear reactors, which is great. So high level, there's essentially thermal reactors, and then there's fast reactors. Those are the two types. And what does thermal and fast mean? So what thermal means is that when you have the nuclear chain reaction, it releases some neutrons. And then the goal is, so uranium releases like 2.5 neutrons on average per fission event. And then the goal is to get exactly one of those to go hit another uranium and cause another fission reaction. That's the goal. That's when you're at like critical. And you want to stay at critical. You don't want to go supercritical, and you don't want to go subcritical. So all reactors are trying to do that. And so thermal reactors, what they do is they provide a whole bunch of water, and then the neutrons will bounce off of the water and slow down to a lower energy, where the probability of absorption by another uranium atom is higher at lower energy. That's just so happens to be the case for uranium-235, and then so then the neutron transfers its energy to the water, which helps the plant, and then at the same time it slows down that neutron so that it can be reabsorbed by another uranium atom. So that's a thermal reactor, and they call it thermal because the neutron is essentially at room temperature after it bounces off the water for long enough. And then the other high level type is a fast reactor, and that's where that's if you have like breeder reactors or fast reactors. So if you have the fuel be able to absorb the high energy neutron directly from the fission event, then the neutron never has to slow down to continue the chain reaction, and that's called a fast reactor. And by and large, almost all reactors are thermal reactors. Yeah.
Excellent. Thanks. Thank you. That was very succinct. I love it. So we'll come back to more about reactors and things like that. For now, I want to go to Justin. So uranium's kind of been plagued by a bear market for like over a decade, and it's been a very difficult trade over the decades. So what, if any, are you seeing change-wise with regards to this now?
Thanks, Tracy. Can you hear me okay?
Perfect.
Awesome. Well, I think a little bit of historical context is necessary to help explain where we're at now in the cycle. And uranium cycles, just like any commodity cycles, it goes through pretty big boom and bust cycles that have to do with the movement of the price, increasing or decreasing in demand, and of course, production responding to price action. And uranium cycles tend to be much more extreme, let's say. And part of the reason for that is that it takes a very, very long time to develop new uranium mines. And that has historically been the case. That continues to be the case. In the previous market, we had about 15 years of a bear market leading up to the previous bull market. And this had a lot to do with just the classical boom and bust cycles, but we had an abundant secondary supply back then, and this was primarily coming from the downblending of nuclear warheads that went on for 20 years and ended in 2013. So despite that, we still had a bull market in the mid 2000s when the market started to tighten a bit, and there were a couple of events that triggered some fears of scarcity for nuclear utilities, floods at mines specifically. But that cycle really only lasted for about 3 or 4 years, from the bottom to the peak of that run, and really it fell at the kind of at the GFC and started to recover. There was still very much a positive outlook for nuclear energy at the time. The commodity started to recover, and then we had the Fukushima Daiichi accident. And while this accident was certainly negative for sentiment for nuclear and for investing in uranium at the time, that hit to sentiment lasted not very long in the actual investing space for uranium. But what happened essentially was Japan shut off all 54 of their reactors, their entire fleet, and about 10% of the world's demand for uranium came offline in a relatively short period of time. So that demand hit really is what caused the bear market for the most part, which lasted from 2011 until, let's see, the bottom for uranium itself was 2016. Other elements of the fuel cycle, including SWU, or the cost of enrichment, continued to fall for another couple of years. And it's just taken a very long time for the sector to recover and work through the abundant above ground mobile inventory that was generated during that bear market. So because you have such a long lead time for developing mines, and much of the sector operates with long-term contracts, production didn't come offline at the same time that demand was hit from Fukushima. So you had, for example, the Kazakhs continued to ramp. They were 100% state-owned at the time, continued to ramp production. Their peak production was in 2016, which not coincidentally was the bottom for the actual commodity itself. So following kind of the bottom of the commodity, we had a couple of elements, primarily that helped to work through that above ground mobile supply. So one of those was the shuttering of various mines. So we had Rabbit Lake come offline in Saskatchewan, Cameco's mine. We had Paladin's Langer Heinrich go into care and maintenance. That's about a 5 million pound a year mine. And we had Cameco put McArthur River on care and maintenance. That's a gigantic mine, very high grades, very large deposit, around 18 million pounds a year of production at the time. And Cameco, of course, then by shutting down or putting McArthur River in care and maintenance, was incurring extreme costs in doing so. And they then went into the market to purchase uranium to cover their contractual obligations for deliveries. So that helped to work through a lot of above ground mobile supply. And then the other element that really helped was something called a carry trade. And this is essentially uranium traders signing shorter, kind of midterm contracts with utilities, and then covering those contractual obligations by purchasing in the spot market. This was a absolute boon for traders for about a 5-year period. And utilities basically went to carry trades instead of going to the Camecos of the world and saying, hey, we'll go ahead and sign these $45 contracts that you guys need to help support bringing McArthur back online. Instead, they went to a carry trader and signed a $30 contract for a 3-year delivery. The traders would add the cost of carry, storage costs to keep the pounds on their books, They'd factor in interest rates, which at the time, of course, were essentially zero, and then their profit margin. And this worked through a ton of above ground mobile supply. Of course, this was very bad for the producers because there were only a couple at the time that could make any money with those low prices. So that brings us kind of up to the present, where we've seen recovery in the commodity from about $18 a pound to right now, the spot market is close to $58 a pound. And the sector is working on a very strong recovery. We've seen one big leg up for the equities with a big correction that I think we've bottomed out in. I think we're starting the recovery for the next leg up in the sector. And these bull markets can really move in an incredible fashion when all of the elements are lining up. We believe all of those elements are lining up for the sector. We have a number of physical uranium funds and trusts that when capital flows into the sector, can really consume a lot of uranium in a very, very thin market. And we're just at the very beginning of what we believe is going to be a 4 or 5+ year contracting cycle for nuclear utilities. So there's much more in all of those elements I could dive into, but I'll kind of leave that there for now.
And then kind of what are the biggest challenges? I mean, this is kind of a very broad question, but you can take this where you want. What are some of the biggest challenges facing the industry right now?
Facing the uranium mining industry, the nuclear industry?
Both, either or, both. Take them both.
Oh gosh. Well, I think facing the nuclear industry, those challenges are slowly but surely dissipating. I would say in the United States, the biggest challenges are probably still bureaucratic red tape and regulation. There's, for the most part, in most countries, you have the majority of the populace actually in favor of nuclear now, including in the countries that have recently shut down their reactors, like Germany, or countries that have experienced both the most recent nuclear accident, Fukushima in Japan, and historically the only nuclear wartime event, which also is Japan. The populace in Japan is majority in favor of nuclear. So sentiment has really shifted for the positive. I would say that the biggest challenges for the sector have to do with bureaucracies and, of course, long lead times and high costs for building traditional large-scale reactors. And of course, that depends on the jurisdiction. That's very different in, let's say, Canada or the UK or France compared to China, for example. And China is building around 10 reactors a year, shooting to more than double their reactor fleet in the next 6.5 years and go from 55 gigawatts to 120 gigawatts by 2030, which is a profoundly large build-out program for China. The biggest challenges for the mining sector, in my opinion, has been the undercapitalization of the sector during the bear market and leading up till even now in terms of actually getting new mines into production, and of course, skilled labor force, and that in particular is in the West. So those two things I think are going to limit the speed and the capacity in which production will be able to come online fast enough to respond to the price environment that we're currently in and are going to be in the next few years. And of course, just the natural growing demand for uranium by the growth of nuclear, which is set to grow 4 to 6% per year going out into the next decade and beyond.
Excellent, thank you. Well, we'll move to the mining sector, more towards the mining sector with Chris. Hi, Chris. So kind of, can you give us an overall kind of current state of global market supply-wise? And then I also wanted to ask, about sanctions. The U.S. is talking about uranium sanctions on Russia, and I assume that the EU would follow if the U.S. does, because that's what seems to be happening as far as sanctions are concerned. And how would that affect overall supply?
Hi, everyone. Is my mic good? Hello?
Perfect.
Okay,
You're great.
thank you. Well, like as Justin said, we already are kind of in a deficit here for the last couple of years as far as the supply side goes. We do have some production that can come on, as in restarts, some limited new production. So basically, we are looking at a deficit going into this next buying cycle. And that's going to need to be remedied. And it's going to be the junior miners that are going to have to find the new discoveries and bring them to market. Capital is a big problem for a lot of us. Raising money right now in this environment hasn't been the easiest. Those who did do a lot of raises here in the last couple of years and use that money are now going to have to come back to the market again over the next coming year and repeat the cash inflow and keep working on their projects. And thankfully, we're seeing a turnaround in the pricing, which, depending on who you ask, we're probably looking at needing anywhere from 65 plus just to get any interest back in the junior sector for major funding, in my opinion. And I think we'll see that, and it's slowly coming around. So on the supply side, we've got a lot of work to do. We need to get the money into the sector and get it all moving again, basically. And with the Russia situation, that can get messy. I'm not really sure how that's going to play out.
I was kind of wondering because Kazakhstan, produces a lot of uranium, and then Russia processes it, and I don't know if that would be taken off the market too or included in sanctions.
Well, and that's the big gray area that we're facing. I believe it's like US is like 42% is coming from Kazakhstan, and basically Russia as well, like you said, because Russia's doing a lot of the refining. So if Kazakhstan was to stick with Russia and if sanctions were to be applied and Kazakhstan was to hang with Russia, the market would get really tight really fast. And then, like you said, with China building 10 reactors a year and Kazakhstan being one of their largest suppliers, with this tension that's going on between the US and Russia, we could see Kazakhstan just kind of slowly send more of their production to Asia and Russia and places that are not, USA, Canada, EU. So this Russia sanction thing could get really messy and would be, it'd be great for the price of uranium. It would definitely cut out so much production, and I don't know what the US would do, honestly, if it were to happen. I guess they would have to start going to like overfeeding and what other remedies they can to keep the supply flowing. But we do need to see a large flow of investment into processing of uranium, and that's going to need to be done here in either the USA or the EU. Maybe Australia can step in, but I don't think that'll happen. I'm kind of on the fence whether we'll actually do any sanctions on Russia for uranium. You'd think we would have seen more on it already if that was the case, but we'll see what happens in the future here.
And then I kind of want to move to the Canadian side. So Canada basically comes in at number 2 for global uranium production, though we have seen kind of a decline in production since 2018. So being that you're in Canada, or your company's in Canada, what are kind of the challenges and benefits for uranium mining industry in Canada, and particularly with regards to tightening regulations from the Trudeau government in the overall mining sector?
Well, as far as Canada goes, we do, like you said, we are the second largest producer. We have some of the highest grade uranium in the world, and the Athabasca Basin in particular is really where most of Canada's uranium is going to come from in the near future. We have the mines that are currently on care and maintenance that will be brought back on. We've got a couple of projects that could come into production over the next 4 or 5 years, but we really do need to step up on our juniors and start trying to see what kind of discoveries are left in the basin. And we're doing the work, and if there's more discoveries to be made here, which I'm very confident there is, we will see these over the next few years. And as far as like the Canadian government goes, they are talking the good talk. Like they're acting like they want to help the miners in Canada, whether it's uranium or lithium, any of the critical minerals. So they're talking about help speeding up the process. So far, it's mostly talk, but I think that they see that we're going to need to do this one way or another, especially if they want to meet their 2030 goals, their 2050 goals. The only way to do it is really is getting nuclear online, because otherwise we have no base load. There's no appetite to build more natural gas plants. So we know that's not an option. So I think the Canadian government will help out more than hurt. Will they inadvertently hurt us? Who knows? Sometimes these policies get really convoluted, and it's hard to see where they're going to go with them. They talk about doing this and that, but they don't actually follow through with it. But I think at the end of the day, Canada realizes we need these critical minerals, whether it's uranium, lithium, nickel, any of those ones. We need them, and I think they are going to open up and make it a lot easier to bring a mine into production. Because if we're doing 10 years to license a mine and get it permitted and brought in, that's too long. We're going to need this uranium in 5 years at the latest. So I think we're going to see the government relax and just help us move along.
Let's hope. I agree. All right, back to Pete here for a minute. Let's talk a little bit about regulation that's going on in the industry and how this will affect supply and demand over the next couple of decades.
Yeah. Okay, I'm going to put another tweet. This is my canonical graph on the topic. There was two regulatory bodies for nuclear in the US. There was the Atomic Energy Commission. That was the first one that got all of our reactors going. Okay, the tweet should be in the nest. And then that went from the mid 50s until the mid 70s. And then they're essentially like the climate change people, their first target, by climate change people, I mean like the environmental activists, like the radical environmental activists, their first target was the nuclear industry. So pretty much what they did to fossil fuels today is what they did to nuclear in the 60s and the 70s. And they succeeded. They succeeded in getting the Atomic Energy Commission disbanded and getting the NRC implemented. And then, as you see, in the 70s, they overhauled all the regulation for all the construction, all the reactors under construction, and the cost of construction just skyrocketed. The time to build a new reactor went up by like a factor of 5. Which these are huge facilities, so a factor of 5 in construction time is enormous. And then that's pretty much how it is. The total number of nuclear power plants in the U.S. Pretty much stopped increasing in the 70s, or really in the early 80s. And we've never really been able to recover. So in my mind, future demand in America is hugely limited by regulations. That's what I see.
And so do you see them easing these regulations at any time, particularly, with, I know it's not really specifically mentioned in the Inflation Reduction Act, but, if we want to meet these goals.
Yeah. It's really, that was one of my first red pills about climate change. Was it's like, oh, we have the solution almost a century ago. We were making these things in the 50s. So Trump, everybody has tons of things to say on Trump. But one of the things he was doing was he actually had a submission to the NRC where he tried to get them to redo their licensing process such that they had guaranteed approval or approval or denial of a new plant within 3 years, as opposed to sometimes now it's 15 years, which is crazy. Under the Atomic Energy Commission back in the 60s, some of the plants got approved in 10 to 15 months. Those were the faster ones, but it did happen. And we didn't have any problems. Like that was sufficient. And from what I understand, I need to look into this more, but from what I understand, Biden pretty much undid as much of that as possible. So yeah, it's libertarian dependent.
All right, so we'll have to wait and see on that one. Hopefully, we'll get some advancements. Speaking of advancements, what are some of the advancements? I can't speak. Advancements or research being conducted right now in the field of nuclear energy. You know, for example, there's a lot of talk around advanced small modular reactors. So what are some other advances again in the field, and you can maybe even talk about what the small modular reactors are.
Yeah, it's the regulations really put a limit on R&D. Like if you go inside of a nuclear power plant control room, it looks like you just went in a time machine back to the 70s. Like the knobs are massive and everything's like analog, it's not digital. And that's just because the regulations prevented the advancement of the reactor control rooms. But the advancements that are still being made are a lot in material science, are the ones that I'm aware of, are in material science. Like they'll make control rods that can handle higher temperatures, or reactor components that have better material properties. One kind of cool thing is for pressurized water reactors and boiling water reactors, which are the two main types of fission reactors that we have. They enrich the fuel to like 3 to 5% U-235, and originally we did gaseous diffusion. Today we typically use centrifuges to do that enrichment process. There's now a new method where they actually use lasers, which sounds so funny. You know, they're not on sharks. They actually can use lasers to do the enrichment. So that could speed up the enrichment quite a bit. And then for the small modular reactors, I think one of the coolest things about the small modular reactor is that there was he's a professor at Caltech, I think, and he created a small modular reactor design that was completely sealed off. So he called it like a nuclear battery. So it could just run for 30 years and it was completely sealed off. So nobody could ever open it. And it like really reduced the proliferation risk, which in my mind, the regulation pretty much covers 3 domains. It covers radiation safety, environmental issues, and proliferation risk. I think that the radiation safety and the environmental issues have been completely overblown. I don't think that those were done in good faith. But the proliferation risk, I will give them credit. I actually do think that is legitimate. So this sealed off small modular reactor, that would help with proliferation, which is pretty cool. So that there's kind of a give and take. If you have a small modular reactor, there are a higher total number of reactors. So it takes more effort to keep track of all of them, you know, to help with proliferation regulation. But you can do cool innovations like that, which can make it intrinsically much harder. So that's kind of the give and take around small modular reactors.
I mean, from what I've read, sounds pretty cool. So we'll go back to Justin and kind of talk about more of like investing in this industry. So, where are you seeing kind of the largest growth areas in this technology, like location, country-wise, company-wise? You don't have to name specific companies, but kind of the growth areas.
Well, you know, I think a lot of what drives this investment thesis has to do with flows and capital flows. And oftentimes when the flows are coming in relatively heavy into the physical trusts, into the physical funds, into the ETFs, it tends to lift all boats for the most part. But with our with our process for choosing our companies that we've invested in our focus list, we essentially have focused on companies that will become real companies. By real, I mean will actually end up producing something of value. They'll be mining uranium out of the ground. They'll be producing cash flow. We feel that there's incredible opportunity in a number of companies that are in that relatively small kind of mid-cap range that will be cash flowing companies during this bull cycle. Another kind of X factor amongst some of our best investments in the space thus far has been when a company has a unique company catalyst that's not necessarily related only to the price rising and flows coming into the sector. And that's something that is more difficult to drill into, but you have to understand what the company's goals are, what the management is capable of doing, and what they're planning on doing. And sometimes when those types of catalysts can hit the market, you can see extraordinary gains. In the investment gains in the previous bull market were astounding. We had companies go from just a couple of pennies up to multiple dollars. Investors made a huge amount of money in the previous cycle, and in my opinion, we're in that the end of that first correction after that first leg up. I think there's incredible upside. We have most of the innings in the game left still. But of course, you have to look at what you're investing in. I think taking the shotgun approach is something that is going to leave a lot of money on the table. So if you're able to actually drill into the companies and choose wisely, you can incredibly outperform the benchmark ETFs, which is what we've done so far and what we hope to do continuing going forward. But there's massive growth, set for the sector across the board. And this is just starting. The entire sector of publicly traded uranium mining companies is less than $40 billion in market cap, even though the number of companies has grown substantially. So we've gone from about 50 or 60 companies, let's say 2.5 years ago, to over 100 companies. And so that's just starting. And the same thing happened in the previous cycle. You went from a few dozen companies to close to 500 companies in about a 5-year period. And that has already started. We're seeing companies pop up, a couple every month now at this point, if not more. And that includes the SMR space, like Pete was mentioning. It's a very exciting space for a lot of reasons. And I think just some of the talking points on SMRs can address the primary concerns of people who are not very informed about the historical safety of nuclear. How safe are they? How much waste do they produce? They're too expensive. They take too long. So a lot of these things in terms of SMRs are still relatively theoretical and in the design phase, but we are implementing 2 demonstration projects in the United States with the support of the DOE. And I totally agree with Pete. I think the regulatory bodies in the United States have been and possibly will continue to be impediments to the sector growing as far as new nuclear in the United States. But I think the Inflation Reduction Act was a step in the right direction. There are clean energy investment tax credits in addition to the clean energy production tax credits that are supporting the existing fleet. And that's, I think, probably the biggest takeaway from that element. I realize I'm kind of going in multiple directions here, but one of the primary reasons for this investing case being so strong has to do with the de-risking of existing reactors, not only in the United States with the largest fleet, but in many countries around the world. So the fact that we're seeing, kind of the ESG crowd start to embrace nuclear, regardless of where you stand on climate change, there are multiple countries. In fact, most countries have clean energy or carbon neutrality goals that they're trying to hit. And of course, nuclear falls under that category as well. So the existing fleet being largely de-risked, meaning planned decommissionings, many cases are likely to be extended. The lifespans are likely to be extended for existing nuclear reactors in multiple countries around the world. And so that demand for uranium stays relatively stable, even in recessions. So as it's basically 100% consensus that we're going into a recession or already in a recession in the United States and potentially in Europe, where you see many other commodities sort of get hit from temporary declining demand, let's say. Uranium is not one of those. And the nuclear fleet largely is consistently operating. There is, you can flex up and down a little bit in terms of energy production from a plant, but it's basically static and in this case actually growing. So recession concerns don't actually necessarily affect the price of uranium. Of course, they can affect capital flows in the equities, at least in the short term, which they have over the past year or so. But it's a very stable on the demand side, and that's something that gives us great confidence in this rising price environment for the commodity.
And this is just kind of a sidebar. I was thinking of it while we were talking, but why do you think we're seeing the EU push against this? You have basically the EU against France, where, France wants nuclear energy to be counted as clean energy, and, you have Germany that doesn't. And they're pushing against this. Why do you think? Literally makes no sense, especially when you have Germany shutting down nuclear plants and opening coal plants.
Well, I don't think you can really, yeah, I know. It's against all logic. You even have, I believe his name is Habeck, I think he was either the energy commissioner or the leader of the Greens. I think the energy commissioner in Germany, who was, of course, one of the sole leading voices in support of shutting down their last reactors, which they just did a few months back, already coming out and claiming they've got an energy crisis on their hands in Germany, which was the most obvious outcome from the choices that they made with shuttering nuclear and vastly expanding coal, because they've, with an incredible investment in solar and wind, to the tune of $500 billion over the past decade or so, they still have insufficient energy in the country, and you've seen industry leave the country. It's a bad situation. The second dirtiest grid in all of Europe, next to Poland, and Poland is actually looking to aggressively build out nuclear. So you can't really lump in the whole EU, but there are a few countries that are anti-nuclear. And interestingly, France is really holding strong and kind of putting a firm foot down, saying, "Hey, we are expanding nuclear." In fact, France is putting forward, I believe this story came out last week, I believe it was 100 million euros to support the expansion of a workforce in the nuclear energy in the country. So not only have they reversed their plan that they established in the last decade to reduce nuclear from about 70% of the grid to 50% of the grid, they completely reversed that. They're actually looking to build out another 6 EPR2 large reactors in the country by 2035, with the potential of 8 more in addition to that, as well as expansion of the fuel cycle. Orano in the country is a major Western enricher and a major Western converter. So France is looking to expand nuclear. They are obviously the big player in nuclear in the EU, but there are many other countries that are also in support of nuclear there.
Well, and that was a sidebar. And then my next question to you was, when you're looking at companies, what are the potential risks and benefits of investing in, say, small cap or junior uranium mining companies versus large cap?
Well, you're always going to have, I hate to say that anything is really super safe, that we have a very volatile sector, but of course with that volatility comes outsized gains. You can't have one without the other, right? And so, but with the large caps, the Camecos, the next gens, the Denisons, and of course the ETFs, you have a much more stable, much more liquid investing vehicle. And so when you see kind of quote unquote smart money institutional investors come into the space, you'll see big volumes come into Cameco and NextGen and the Sprott Physical Uranium Trust, which has been trading at a relatively persistent discount to its net asset value. But historically, when money really flows into the sector, that's one of the vehicles that you see high volumes in, because it's majority institutionally owned. Of course, when you go down the market capitalization stairs, you get to higher potential for upside, but of course more risk. It's really hard to make a blanket statement on this, because everybody has different goals within their own investing goals within the sector, or within just in general investing, general portfolio management. So if you're younger and you're more aggressive and more tolerant to risk, you can speculate on smaller caps and have maybe potential greater gains, especially if it's an explorer and they hit something of significance during a bull market. You can have incredible gains. But even the large caps are returning multiples. And so, I think a strategy of diversification is always intelligent, sufficient diversification. Of course, if you own 35 companies in the space, you might as well just buy the ETF and not do any work. But of course, you're going to have muted returns on a relative basis. So it really depends on what your goals are, what your risk aversion is. And I think it's very, very important to do sufficient work on individual companies if you're going to go that route, which is what we do. So you have to look at share structure. That's something that is almost entirely overlooked by retail, and it's absolutely crucial. You have to look at outstanding options and warrants. You have to look at share count. You have to look at historical dilution, expected dilution going forward, et cetera, et cetera. And then you have to manage risk in terms of jurisdiction. So there can be incredible upside if you bet on a company in a jurisdiction that doesn't currently support uranium mining and then they flip. That's, of course, a bet, we don't really like to make. It's just too risky, but that is there. So I think making sure that you're in a jurisdiction that is already in support of in support of uranium mining is very, very important. And then, you have to be able to trust management, and you have to look at share structure. And of course, grade is king. That's no different in uranium than any other mining sector.
Absolutely, thank you. Now back to Chris, I want to talk a little bit more about mining operations. So just so people get kind of an idea of what goes on in mining operations and what affects those. So one is this kind of a three-part question. One is, how is quality and grade of uranium ore determined, and how does this affect mining operations? What factors influence profitability and economics of uranium operations? And then how does the presence of other minerals and elements in uranium ore impact the mining process? I know that was kind of a lot, if you need me to repeat that.
No, I'll be okay, thanks. Basically, we figure out the quality by sending it to the lab, and they tell us what we have. It's really what it comes down to. Thankfully, like, you have to look at it too. Like, if you look at the USA and Wyoming, what they consider high grade down there, if you were to put that into the Athabasca Basin, you'd probably pass on it. So grade and quality tends to meet almost jurisdictional. So like I was saying, like Wyoming, you have a high grade, but in the basin, that would be considered a low grade. So basically, we just go and get our labs results and then check it out and see what we actually have. Obviously, the higher the grade, the better the profit margin. So what happens is you have to process this ore. So the more ore you have to process to get a pound of uranium, your costs go up. So if you're getting to the basin where you're getting these high grades and you're like 10% plus, you don't have to do as much processing of the minerals. So your costs come down really quick. But then you also have Wyoming, where a lot of the stuff is shallow down there. So they can get at the ore quicker with moving less dirt. So that kind of offsets the whole, lower grade side of things. So it really just depends on the jurisdiction you're in, how deep down you have to go, how much ore you have to process. All these things add up. Obviously, the less ore you move, the cheaper everything gets done. As far as the presence of other minerals, you don't see a lot of it in the uranium side from what I've seen anyway. We tend to just focus on the uranium. It's not like, where copper, you can get yourself some silver and some gold off to the side, and you can make some money on those byproducts, as you call them, and they just kind of add to your profit margins. But usually with uranium, you tend to just do the uranium ore. At least that's what I've seen anyway. So the worst thing I think is just if you have too many other minerals in uranium, it's just going to increase your cost to process the ore and get those pounds out of it. So basically, it's all just your jurisdiction you're in and what kind of ground you're working.
And then what are some different mining techniques employed in uranium mining? Or is it all the same, like, open pit, underground? Just to kind of give us an idea of, what kind of mining technologies there are out there. And is there something better than the other? And then in addition to that question, I got multi-part questions for you. In addition to that, what are some new mining technologies that you are employing or looking to potentially employ either for your project or, industry-wide?
Actually, ISR, in situ mining, is the big thing right now for uranium mining. It's honestly, it's if you don't have the ground disturbance that you would get with an open pit, you don't have the costs that come from having an underground mine. It's so basically with ISRs, all you do is you put down drill holes into the resource that you've found. You pump in a solution on one side, and then you have another drill hole away from that one that sucks that solution out. And when that solution comes out of the ground, it contains all your uranium and stuff like that. So ISR is actually probably where I'd want to be if I was going to be trying to move a project forward, because it keeps the environmentalists happy with the low footprint on surface. So you're not ripping up all the ground, you're not moving around all this dirt and ore. Because once you start bringing ore to surface, then you'll have to contain that, like as that ore, you have to basically reclaim that ore at some point. So it creates an on-surface hazard. Whereas with ISR, everything's kept inside and contained. If you pump your solution into the ground, you pump your solution out of the ground. You have multiple drill holes instead of big open pits. You basically you can take your waste product and even put it back into the ground with your part of your recycling of your chemicals used to remove it in the first place. So ISR is honestly my favorite one right now as far as where the mining of uranium is going. It is something that's probably going to see a lot of in the States. We have a project in Canada that's moving towards that. And that's kind of where my favorite is anyway, as far as like producing of uranium. Because with this ISR, what we have it right now is, and this is not just with uranium, it's not in my backyard. No one wants solar in their yard. No one wants wind. No one wants a mine. No one wants a reactor. Like, not in my backyard seems to be the biggest problem we're having right now. And it doesn't matter what you're building. If it has a footprint, people are complaining about it. Everyone wants to fix the problems that we have with energy, but no one wants to have them in their backyard. Like, even like with Canada, the USA, they talk a lot about processing of minerals, but they don't talk much about mining minerals. And people see that. They're like, well, why are you always talking about processing minerals, but you're not talking about actually mining them? Like, that's got to change if we really want to take a serious look at moving away from fossil fuels. We have to seriously consider this not in my backyard approach to things. So I think ISR is the way to go for nuclear in that sense, because it fixes that problem. It's very low footprint, and it should be a little easier to placate the people that are worried about these things, like you said, open pit mining and all that kind of stuff.
I love it. I love it. And then we'll go back to Pete. We'll do one more round and then the final round. We're probably going to go over this hour a little bit. I hope everybody has a little bit of time, but we'll try to do this quickly. I just have too many questions. So I got to go back to Pete. I can't, I can't not talk to you and you not talk about fusion. So as far as fusion is concerned, is it actually possible? And where is it as far as advancement is concerned? There's a lot of talk about it, and there has been for a lot of years. So where are we at?
Yeah, so oh man, so excited. Okay, so this is what I actually do. This is my real job. So I actually did out some numbers yesterday for this space. It's so hard to explain how difficult fusion is, and there's something. Okay, so if you have high enough pressure, like the core of a star, then fusion happens naturally. But then it's very hard to miniaturize that into like a 1 gigawatt or a 10 gigawatt system. That's very, very hard. Pretty much the smallest fusion device we've been able to make successfully is a nuclear weapon. And that's in like the tens of thousands of terawatts or something. So it's really hard to get it down to like 1 to 10 gigawatts. And one way to kind of visualize this, if you were to take planet Earth and then you were to hollow out a little section in the exact core, and you put some fusion fuel in there, and then you like let planet Earth collapse on it. That's roughly the amount of pressure that you would need to recreate inside of a fusion reactor to get fusion to go. And that's roughly the amount of pressure that is created inside of a nuclear weapon, which then gets fusion. So that's just kind of perspective on how hard the task is. And so with that in mind, it's actually we have hundreds of devices scattered around the world that are getting small amounts of fusion. It's one of those things where it's very similar to lighting a candle. And what we've had so far is we can do the spark, and then it lights the candle, and the candle gets like 1% of the energy it needs to sustain itself. And that's been growing from like 1/1,000,000th of a percent in like the 60s to like 1% today. So we're actually we're actually getting to the point where we're chipping away at reactor designs that are too expensive. For the last 50 years, it was just like, by any means necessary, put lasers on it, make it insanely expensive just to get any fusion necessary. And now we're at the point where we're close enough where we're like, yeah, I mean, this design is cheaper, so economics are coming into play. But high level, I think that, so I'm biased, obviously. I'm starting my own nuclear fusion design company. So the thesis of my company is essentially that nuclear fusion needs to be able to dramatically lower the cost of prototyping new ideas. I don't think we found the golden idea yet, but I think that we're in that golden idea space. And so that's why my company is doing simulations to try to explore more reactor designs. So sorry if that wasn't like the most direct answer, but that's my conceptualization of the space right now.
And do you just kind of, for people that might not know, like just a little bit of the difference between fission and fusion?
Oh, yeah. Yeah, absolutely. Okay. So pretty much the only reason that we do nuclear fusion is because it doesn't have the radioactive waste and it doesn't have the proliferation concerns versus fission. And so nuclear fission is taking the biggest atom, like the largest naturally occurring atoms, like uranium and thorium and plutonium, and then breaking the nucleus in half, and that's like splitting the atom. That's fission. And then fusion is the exact opposite. They're both nuclear processes, but fusion, you take the smallest atoms, like hydrogen and various types of hydrogen, and then you combine them, you fuse them together. And when you fuse together two nuclei, it's actually like a very extreme like nuclear reaction, and it releases a ton of energy. So high level, all combustion gets its energy from electrons reconfiguring themselves on molecules. That's how combustion works. And then high level, all nuclear energy gets its energy from reconfiguring the nucleus. And the nuclear forces are orders of magnitude higher than the electrical forces for the electrons. So that's where fusion and fission both get their super high energy densities from.
Perfect, thank you. And moving back to Justin, this question, how do macroeconomic factors such as inflation or interest rates influence investment attractiveness of uranium?
That's a really good question. I honestly think the macro environment has had a significant influence over the past 12 months, especially on pretty much everything. And uranium equities have not been spared from that. But going forward, one of the big factors in terms of interest rates when it comes to the actual physical uranium market has to do with the spread between the long-term price and the spot price of uranium. So the bulk of the uranium purchasing that is done by actual nuclear utility fuel buyers is in the long-term contracting market. This is 85+% of their total uranium needs comes from long-term contracts. But ironically, it's the spot market that investors watch, and it's the spot market that has the most visibility. So all of the other elements of the fuel cycle, so the cost of conversion, the price of UF6, which is converted uranium, the cost of enrichment, the price of EUP, which is enriched uranium, and of course the mid and long-term pricing for uranium itself, all is only updated on a monthly basis as far as what the public can gain access to. However, the spot price is updated sometimes multiple times throughout any given trading day, and that is what the sector tends to watch. Now, what happens is the spot price is actually pulled up and or down, but in this case, primarily up by the term price due to the spread between the two markets that is dictated by interest rates. And that is because traders will actually arbitrage the two markets. And the ability for them to do so has everything to do with interest rates. So to the extent that, let's say, in theory, if interest rates, at least in the short term, have peaked, if we start to see rates come down at some point, that will lessen the spread between the two markets and actually have an accretive effect on the spot price of uranium. But I would say overall, money is expensive right now. And what this sector needs is development of basically every uranium project that is out there in order to address a very concerning supply shortfall going out towards the end of the decade. We're talking hundreds of millions of pounds of uranium that is short simply by 2030. And these projects takes a very, very long time to develop. There are some projects in lower grade jurisdictions that have multiple hundreds of millions, if not into the billions of capex to develop. That is in combination with the necessity for a significantly higher uranium price. Some of the lower grade projects, like I mentioned, probably need somewhere in the $80 to $85+ per pound range, and we're here still under $60 a pound spot. But of course, projects that have that large of a capex, they're not just going to come online and spend, north of $1 billion to hopefully sell their uranium to somebody in the spot market. They're going to have to secure at least some level of long-term contracting in order to de-risk the development of their asset. So when money is expensive, it makes these projects even harder than they already were to develop. That's the environment that we're in now. We have a difficult capital market, we have a difficult labor market, and we have a huge supply deficit. This year alone, we're looking at somewhere between 40 and 50 million pounds short when we're talking about primary and secondary supply compared to primary and secondary demand. That, of course, I don't think we even have the time to get into it. But this, of course, is even, that demand number is even juiced up, let's say, by the fact that Western enrichers have been raising both operational and transactional tails assays, which, long story short, more uranium is needed with higher enrichment tails. So when you look at, let's say, a calculation of uranium demand based on gigawatt of nuclear produced, that assumes a certain enrichment tail assay. And now that we've seen tails assays jump both for operational and new enrichment contract side, we're looking at a 10 to 20% jump in uranium demand. And that starts essentially now. That, of course, will continue to grow as conversion capacity is opened up going out into the future. ConverDyn's conversion plant in the United States is set to open any day now, literally. And that is going to help a bit on that front. But we have a huge supply shortfall. Mines have to come online, and this is a difficult environment to do so. Not only speaking from a capital perspective, but speaking from a labor force perspective as well.
Thank you. And then we'll go to Chris. So this question actually comes from Twitter. It says, I'd love to hear thoughts on how big oil could step in and impact this tiny billion-dollar market cap sector. If big oil targets nuclear uranium for their energy portfolio and ESG profile, it could propel the uranium sector to unimaginable highs. I think they did this in the 1960s. So he would like your thoughts on that.
That's actually a question I've been wondering myself, because I believe it was the 1950s, 60s, oil did move into the sector, and they did lots of exploration, and they were one of the key funders and drivers behind it. I wouldn't be surprised if we see them come back in, honestly. Like we see, like Shell is kind of pulling back from their renewables that they've been championing championing for the last few decades. So, you know, if big oil's backing away from the renewable side of things, and if they believe that in the long term, oil is, you know, at the very least going to decline in demand, which is questionable, but I could see them coming back in. And if they did, I mean, the money that they have behind them, they could make stuff happen in a really short fashion. I mean, we all know the problem, the easiest way to solve a problem is throw money at it. It's not always the most efficient way to solve a problem, but it is one way to solve a problem. And I think if they see that there's an opportunity there for them to come in and take advantage of that and you know, have long-term gains from it, I think they'd come in. Again, they're not going to come in if they think this is a short-term cycle, but if they're like me and believe that this is a big shift, like you said, we got China trying building out 10 reactors a year for who knows how many years coming forward. Like this is a long-term trend, whereas in the past, uranium's pricing has always been a boom and bust short cycle. I believe we're in a long-term cycle now, and I think that would be something that would bring these oil companies into the sector again. But we'll see. I hope they do. I mean, as a junior explorer, if they start coming in, it's going to make this space really exciting for investors and everyone involved. So I hope they come in, and we'll see what happens.
Let's do it. All right, the final question, the final round that we have here. It's the same question for everybody. Really, it is, you know, it's kind of your open-ended question. Talk about something that you want to talk about that we haven't discussed, or, you know, what should we, as investors, really be looking at, you know, say over the next, 12 to 24, 48 months. And we'll start with Pete.
Yeah, that's interesting for fission. I really do. I touched on this earlier, but I really do think the biggest thing holding fission back is regulations. And I think that the Atomic Energy Commission actually had reasonable regulations, and that's where the exponential capacity growth happened, is under the AEC. Like people who are against nuclear fission, they say, oh, it takes too long to build and it's too expensive. And under the NRC regulations, that is more true than anyone would ever like it to be. But it doesn't have to be true. You know, it's artificially true. I really do think that the main thing holding fission back, and therefore, like, you know, underpinning economic clean growth, you know, like, I mean, clean in quotes, but like natural gas is fine. But yeah, I really think it's a regulatory issue. And that was actually the conclusion that I came to at the end of my undergraduate. And that's actually like why I pivoted to fusion, because, you know, I'm just not, I hope that we fix that regulatory issue. And I think that's definitely like something like all investors should try to like push for, you know, like the world needs that, in my mind.
So watch regulations. Got it. And next to Justin, same question. Something you want to talk about that we didn't discuss, or what should we as investors be looking at in this industry, you know, say over the next 12 to 24 months?
I would say the things that stick out to me most right now are probably twofold. One would be legislation, multiple pieces of legislation that are moving through the United States Congress currently that are looking to ban Russian uranium imports. So currently the United States has the world's largest nuclear fleet. U.S. nuclear utilities historically, even with the Russian suspension agreement, still receive north of 20% of their overall uranium needs, primarily in the form of enriched uranium from Russia. Utilities have continued to take deliveries on legacy contracts from Russia, but this legislation would effectively ban that. Now, there would technically be waivers that could be implemented from the DOE if a case is made by the nuclear utility that they have no other option, and or it's a national security risk to not take those deliveries. Either way, this legislation going through will have an effect on the price and on sentiment in the markets. I think we'll see some reaction in the markets from that. And then, of course, it has larger long-term implications. Even though the bulk of Western nuclear utilities in North America and the EU have not been engaging in new business with Russia, this legislation really would kind of put the nail in the coffin for that. So looking at that, I think I personally believe it is likely to pass. And I do think we'll see some reaction from the markets from that. The second would be the fact that we're seeing multiple physical uranium funds and trusts show up to the scene. So now we have, the big player in the space, which is the Sprott Physical Uranium Trust, which has an ATM and can issue shares, trust units into the open market when they're trading at a premium to their net asset value, which hasn't happened for a few months. But when it happens and risk is on, they can buy an enormous amount of uranium. They purchased close to 43 million pounds of uranium in less than 2 years. Then we have Yellowcake, which is listed on the LSE, that they can buy $100 million worth of uranium from Kazatomprom on an annual basis. We have ANU Energy, which is a physical uranium fund set up in the country of Kazakhstan. They are still in their capital raising stage. They plan to IPO in, I believe it's Q2 of next year. We have the Zuri Invest vehicle, the actively managed certificate that is just launched. They've been buying uranium, to my understanding. That, of course, all of these vehicles are going to be dictated by capital flow, but we continue to hear of at least 2 or 3 more physical uranium funds that are in the works. So we're going to have a half dozen of these things, probably by the end of the year or the middle of next year. And I don't believe that these have been established without an understanding that there is a investor appetite for exposure to the commodity. So basically, we have this incredible fundamental setup for the sector, a growth sector for nuclear energy, a supply shortfall for the commodity, a rising price environment for the commodity, a very small sector that when capital flows, it really can move the sector in a very big way because the sector is so small. And then we have this sort of X factor, which is these physical uranium funds. And when capital flows into those, into a very, very tight spot market, we're going to see explosive price movements. And I think it is highly likely to happen. What's difficult is to time that. Clearly, we're still in somewhat of a risk off capital environment. Yeah, we're seeing multiple sectors sort of melt up right now, but sentiment is still not there. Liquidity is still less than it was before. So if and when we see those capital flows, that's just kind of it's the nitro that comes into the gas tank, and that is something that I'm really looking out for. So those 2 factors, I would say, keep your eye on the ball. But we have this perfectly good, exciting setup from a fundamental basis without either of those elements. So that's one thing that just really makes this an exciting investment right now.
Fantastic. And last but not least, Chris, something that we haven't talked about that you would like to discuss, or something that we as investors should be looking at going forward for the next 12 to 24 months.
Actually, I'd just like to talk about the small nuclear reactors again for a second here, and then maybe end with a quick question to Justin on it. So we're looking at these small nuclear reactors, advanced reactors, to start hitting the market here in the late 2020s, probably more like 2030s. We're going to see these things popping up as energy being used for industries. So like we're going to see them being used for like cement plants, anywhere where there might be steam needed, or any of these big gigafactories, maybe even. Like we have a lot of industry that's coming out right now, and all these industries are going to need a lot of power, and they're going to want that power near them. These small modular reactors, we can put them where we need them. We don't have to build out miles and miles and miles of grid to have them installed. We can be using them as backup power. Like it's an endless list of possibilities for these. And I don't know, like from what my understanding is, it's not really worked into the future demand for the uranium sector. That's the part where I'm going to ask Justin just to comment quickly. But are we actually seeing the potential for these small nuclear reactors being baked into future demand going from 2030 out? And I'll stop there. Thanks.
I think that's a really interesting question, primarily because the investing side, let's say some of the larger uranium-focused investing funds, ourselves and multiple others that are doing analysis on the sector in the investing world, are not yet modeling in any projected demand for SMRs. So when we're talking about multiple hundreds of millions of pounds short on the supply side compared to demand, that demand is not including two things. That demand is not including SMR demand. That demand is not including speculative capital-based financial demand or secondary demand coming from financial entities. So the general modeling does not include projected SMR demand. However, if we look at TradeTech's work, for example, they are expecting north of 200 million pounds of cumulative demand from SMRs alone by 2035. So when we talk about some of the demonstration projects in the US, that's TerraPower's Natrium reactor, X Energy's XE100. There's a BWRX 300 being built at the Darlington site in Ontario. China is building an SMR. And then there's hundreds of SMRs proposed all over the world. Once these actually start to literally break ground, we're going to see the planned operators of these facilities start to source their uranium fuel. Now, if they can go right to the end of the fuel cycle and buy EUP, they will. But of course, that has draw demand for uranium. So we know that that demand for SMRs is going to be something. It's very difficult to model out what exactly that will be. And so generally speaking, supply and demand modeling is relatively conservative. You don't really price in something that you can't quite count yet. You don't count your chickens before they're hatched. But TradeTech, who does fantastic work, one of the primary nuclear consultancies, they expect more than 200 million pounds of cumulative demand for SMRs alone by 2035. That's in addition to the existing and expected fleet of large reactors.
Amazing. All right, so I know Justin has a hard stop, so I want to thank all of our speakers today. Please follow them on Twitter. They all have great information. Also, of course, follow Place Your Trades to find out what other events that we have going on. Go to placeyourtrades.com and get my blog and my morning post. And that's it. Thank you again, you guys. I really appreciate your time today. And then I'll see everybody next Wednesday.
Thanks so much, Tracy.
Thank you, Tracy.
Thanks, Tracy. Bye.